off-the-plan apartments are worthless. Let's have a look. Good morning, everyone. I'm Florian Heise, and welcome to another episode of Heise Says. I've got my beginning of the week stein of coffee, and I thought we would have a look at this article from the ABC about off-the-plan apartments. Now, if you're not aware, there's a practice where, as a development starts, or even before they've done any work on the ground, just in the concept design, you can buy an apartment off the plan. For those of you who are gamers, it's kind of like pre-purchasing a computer game. You kind of hope you know what you're getting, but in some ways you're not guaranteed on the final outcome. Often, the developers can put sunset clauses into the contracts, and in the past, what's happened is, the value of the apartment has gone up so much, they've weaseled their way out of those people who put a deposit and bought it, a couple of years ago, and resold them. Or the apartment you end up with is smaller than what you got, or it doesn't meet the design requirements. This is essentially you're buying a concept design, but you're not locking in any of the, the finer details in the construction, and you can get bit. Now, people are doing this with the hopes of property prices rising and making a nice hefty profit out of it. But, there's always a but, it hasn't worked out, or at least not in recent years, because the majority of off-the-plan apartments are worth less than the purchase price. Data is showing. Well, there you go. And yet we're constantly bombarded at the moment with the complete turnaround in the real estate sector. Prices are shooting up. You need to get in, guys. Get those loans really quick. I don't know. I do not know. Do you think it's just incompetence on the part of the media? Do you think it is a collaborated strategic effort? Do you think it's a lot of editors and journalists who have invested heavily in the property market? Or do you think it's just issues with the CoreLogic data set? What do you think, guys? I suspect a lot of it's to do with the unique situation where the supply on the market is limited to the upper end or the higher end of the sector. People aren't at the breaking point yet where they need to foreclose or sell. We're not hearing that much. The interest rates are not too high. Maybe people are under stress, but are they having to flip? Are they forced to? And that combined with the complete lack of confidence in the apartment sector might be stimulating those upper ends. People are now able to go a little bit higher. I don't know. I can't see what is going to sustain this growth, what fundamentals there are. The big thing that no one is mentioning in any of these articles, and I'll bring up this chart, is just the sharp drop in foreign investment. That's been overheating our residential sector. Also, building approvals are now back down to 2012 levels. So, yeah, okay, come on. Someone tell me what's gonna punch it on. Is it just a tax cut and a low cash rate? Is that enough to drive all these people who haven't had a wage increase in years to get into the market, when consumer confidence is also shooting right down, and we're hearing that investment apartments are buying off the plan as a sucker's game. Oh, and then flammable cladding, cracking buildings. It's funny. It's a funny time we live in. So shaky confidence in the capital city apartment market is hitting off-the-plan buyers hard, with a significant rise in the number of newly constructed units now worth less at completion than the price they were originally purchased for. Well, you win some, you lose some, guys. Your property does not always go up. Maybe that's what a generation has to learn. 730 can reveal that 60% of off-the-plan apartments in Sydney and 52.9% in Melbourne were valued lower than their contract price at the time of settlement. The latest figures from property data provider CoreLogic for the month of August show that nearly a third of off-the-plan buyers in Sydney were moving into apartments worth at least 10% less than the price they purchased them for. Just 2 years ago, less than 16% of newly constructed New South Wales units were valued below contract price after they were completed. In Queensland, 43.1% of units were worth less at settlement than what they were purchased for. In Western Australia, it was 22.5%. That's pretty high for Queensland. 43%. I'm not surprised, particularly if you look at South Brisbane and West End, just the number of units that have gone up. It's just nuts. So a very fundamental shift in value. Yeah, yes, they're worth a lot less. CoreLogic's head of research, Tim Lawless, said when many of these newly completed apartments were originally sold off the plan back in 2016, 2017, the market was very different. Yeah, it was. I'll bring this up again. I wonder what could have made an impact on that. I wonder. You know? We were seeing values rising at about 15 to 20% per annum in Sydney and Melbourne, Mr. Lawless said. And that people weren't concerned. That wasn't a bubble. We're still seeing articles on news.com, young couple buys 30 houses. Yeah, okay, cool. It's going to be interesting to see what happens. That's the thing. If interest rates just go up a little bit, cost of financing, all of that goes up. Rental prices go down. There's this peak demand. What do you think will happen? That's my worry, is that it could snowball. It slows down slowly, then very, very quickly. One domino can fall after another. So now cast your mind forward to 2019, and we've seen prices come down in Sydney by 15%. In Melbourne, they're down by 11%. A lot of those off-the-plan buyers have seen a very fundamental shift in the value of the project that they purchased a couple of years ago. Mr. Lawless said there'd been a significant oversupply in the high-rise sector, with supply substantially outpacing demand. But he said concerns around construction quality, remediation costs, and flammable cladding had a compounding effect that is probably also weighing on the minds of people in the marketplace and potentially affecting the resale value of those properties as well. There needs to be mention of the integrated networks too going into these buildings, inflating potentially the electricity costs and services and utilities costs in some of these buildings. Now, I will link to another video I did on this topic because, yeah, it's a whole other scheme, guys, that makes all these other deals pale in comparison. It's ludicrous. I read another piece the other day. I might do a video on it. I might not. It's just an architect and a planner who'd gotten greedy, split off a part of their land, and tried to put all these requirements on the purchaser of that land. And council just allowed people to build what they wanted. And now they're all, salty because they've got a building right next to their house that's bigger and overlooking them. So they wanted to have their cake and eat it too. They wanted to sell the land, but then tell people what they could do on the land. If you were smart, you'd develop it yourself and then sell it and have control, particularly if you're an architect. The design's free. So there you go. You can't have it both ways, guys. You can't have it both ways. I thought that was pretty funny. So a string of negative headlines has plagued the apartment market for the past 2 years, beginning with London's Grenfell Tower fire in 2017 and the discovery of the widespread use of combustible cladding on apartment buildings. In Australia, confidence in the market was further destabilised after the evacuations of Sydney's Opal Tower on Christmas Eve and Mascot Towers in June this year, and the other buildings that are repeatedly, I'm going to update the construction map to just show all that were repeatedly, coming in the media nearly every week. Owners at the 10-storey Mascot Towers in Sydney have fared far worse than most. Really? They've been kicked out. What about the Sugar Cube residents that can't even get into their building? And some of the ground contamination issues there haven't really been reported by the media yet. There's a lot of issues there. So not only have residents such as retiree Marie Peters watched their building garner major media coverage for its structural defects, they have still not been able to return to their homes. We have an asset worth $1.5 million right now. It's worth nothing. Yes, yeah. I'm coming more and more to the line that, houses aren't assets. They're liabilities in some ways, Miss Peters said. Particularly this one. This demonstrates clearly how it's a liability. It's your home, it's everything you've worked for, that you think is safe, that you think is protected. Having recently learned that the cracks in the building are widening, owners will meet Tuesday to vote on a program to fund their building repairs. They will decide between a commercial strata loan or a multi-million-dollar levy to pay for urgent repairs. Stage 1 of the levy will cost around $7.7 million, and that's just stage 1, guys. Wait till they have unexpected things occurring on the construction, which always happens, particularly with a complex project like this. At the moment, we have a building that if we don't do anything is worth nothing. And unless we put money in to try and get some value back, we are left with an asset that's worthless. Mascot Towers owners Brian Tucker said. You've got the land. The land's worth something, you'd hope. But there's going to be a stigma with that building for a very long time. So here you go, guys. Off the plan buyers. The key points, according to CoreLogic data for August, more than half of newly constructed off-the-plan apartments in Sydney and Melbourne were worth less than the owners bought them for. Nearly a third of off-the-plan apartments in Sydney were worth at least 10% less. CoreLogic's Tim Lawless said there had been an oversupply of apartments in the high-rise sector. Well, there you are. There may be some opportunities for people to get a good discount on an apartment if you're brave enough. If you're brave enough. Would you do it, guys? Would you do it? Let me know in the comments if you would jump at it or you think it's going to fall more. You think it's going to fall more. Anyway, thanks for watching. Like, share, and subscribe. Have a good start to the week, guys. You know, get the Monday hump day. Not really hump day, but, you know, get into it. Enjoy that commute. And if you'd like to help me produce more content, I have a Patreon subscribe star and referral links down below, and every little bit helps. It helps fund for my glorious Aldi coffee. Not sponsored, wish it was. Anyway, guys, take care. Have a great day.